You were listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 7th of August, 2017. We see the S&P 500 up a little bit for the day, 0.18%. The Qs, that's the Nasdaq 100, up 0.17%. Pretty down day for bonds, down 0.88%. Gold also at 0.78%. Let's jump right into the weekly chart. On the S&P 500, what do we see? Well, we see movement still where it about peaked back over 3 weeks ago now. For the week ending the 21st of July, we're still at that same point. Can't seem to get above about 247.50 or so. So we're below 248. We keep banging. This is 3 weeks in a row, banging up against that. We do not have a weekly vertical crossover. We see the derivative oscillator gaining energy, but that's about it. We do not have a call. We don't know how long this up movement's going to occur, but as we look at our 2-day chart, we can see that we're going on 2.5 days of sideways movement. We're still in a confirmed up move on the 2-day, but again, confirmed down move still on the weekly. If it had been a down day, I think we would have had a crossover going down on that 2-day chart. Hasn't happened yet. We'll continue to watch as the new week gets going. What do we see going on as far as the 4-hour chart goes? Still in a confirmed down move since it rotated over going down back in the afternoon of the 28th of July. So really just a sideways slide since then. Isn't reaching anywhere near as high as it did back on the 27th, which is around 247.86, somewhere at the end of the day around 247.35. So again, market could move up again, but it looks like it's trying its best to peak. But again, we're not making a forecast. We're trend followers. We'll see when the trend gets set. It is not set at this point. When it does get set, if it's a downtrend or an uptrend, we'll help you call it, and we will practice trade it. What do we see going on the Qs, the Nasdaq 100? It also has stalled below where it hit all the way back on the week ending the 21st of July. And again, we have a down candle as far as our Heiken Ashi candlesticks go. You want to know more about Heiken Ashi candlesticks, different than your typical high, low, open, close candlestick. We like them a lot better. Heiken Ashi means average pace in Japanese. We have a great training at the website, chartingwealth.com. All of our trainings are there for free for you. They are priceless. What do we see? Well, we have an open red box down candle. That is, again, just telling us it looks like the momentum has shaved off. We're still in a confirmed down move on the Qs. It is getting close, but really paralleling, not moving up. Derivative oscillators continuing to lose downward momentum. We'll see if this market crosses over one way or the other. The 2-day chart getting close to crossing over, going down, losing upward momentum. So we'll continue to watch what's going on there over the course of this next week. And then what's happening with the Qs on the 4-hour chart, sliding sideways since, well, it hit these same figures all the way back on the afternoon of the 27th and then through the 28th, really just sliding sideways, confirmed down. We do see derivative oscillators losing downward momentum, but our main indicator, the PPO, is going sideways, tending down. So we'll continue to watch. We'll see what we see. We'll report to you what the charts show us. What's going on with 20-year bond fund. It was a down day. We basically have, if you look at it, what you see on the weekly chart for bonds is a doji, means lots of indecision. Prior, pretty much a doji. Prior to that, a green spinning top. Market is, again, not crossing over, going down. Looks like it was going to do that a few times in the past month or so. We do have the derivative oscillator showing downward momentum, but our price percent oscillator is still in the positive on the weekly. We'll continue to watch, think what the bonds are trying to figure out, what the market's going to do. The market goes up, bonds will go down. Market goes down, bonds will go up. Why? Because they're inversely related. Bonds are a place where you go for safety if the market's crashing. So the bond's trying to figure out what's going on. What do we see happening on the 2-day chart? It has not crossed over going up. We were waiting to see if that would happen. It has not happened. The latest candle we see on the 2-day chart is really a red open box with a wick on the top and the bottom. So again, no commitment there by TLT. We'll just continue to see what the new week portends for us. As we look at the 4-hour chart, we can see that the market moved up strongly starting on the 1st of August up through the afternoon of the 3rd, and on Friday down. However, not enough movement to cross over going down, but the derivative oscillators losing energy. We'll continue to watch and see just what bonds do over the course of the next week. Again, don't have a trade there yet. We are waiting to see what the charts tell us. Lastly, we have gold, it down 0.78% for the day. Gold's in a confirmed move down, trying to cross over going up. But folks, we cannot confirm that because it has not truly crossed over. It may do it over the course of the next week. We had 3 weeks of up moves. As we look at the 2-day chart, what do we see? Well, of course, it stopped its up movement right there after the candle closed on the 2-day charts on the 1st of August. We've seen over the last several days, the 2-day chart on the 3rd and the first day of the 2-day chart on the 4th of August, down moves. But again, we don't have a crossover yet, or even that imminent. It doesn't appear. See derivative oscillators losing energy as we hone in closer on that 4-hour chart. We see that, of course, it crossed over going down all the way back on the afternoon of the 2nd of August. And a pretty significant, well, not significant, super, but a down day on Friday, pushing through the 2-day trend line. Now, remember, we told you to jump out when we had that crossover going down on that 4-hour chart after we had that beautiful up move from about 116 to about 120. And again, some of you may be practicing down moves, of course, since we saw that 4-hour chart rotate over going down. Remember, that's a total trading chart. 4-hour chart seems to work time and time again, except in late December and early January. It stops working during about that 1-month period, then starts back up again and is beautiful. Folks, that's where we are at the end of the week. As we go into Monday, the 7th of August, we appreciate you being with us. You have questions, problems, concerns, we're always glad to hear from you. You can write us cw@chartingwealth.com. The way you get all of our information is you go to Charting Wealth, you put in your first name, your email address. You will then be on our daily market review. And with that, we will send you the weekly and the daily market reviews. You'll also get all the information we have, the How to Read a Stock Chart video, the layout from freestockcharts.com, and our 3 worksheets, the trade, the market, the daily market, and the weekly market worksheets. Everything you need to put your training on supercharge to learn how to read these charts. Because folks, when you can trend follow and read these charts, you have the potential to do anything you want financially. But again, we practice, we practice, we practice. Once you get good and you can make up your own mind what to do with your own money, you can do it. We're not a stock calling service. We're an education firm. We are here for you. All you have to do is commit yourself to 10 minutes a day and then just stay plugged in and good things will happen. God bless, my friends. All the best from the whole team here at chartingwealth.com. Be sure to sign up for that email and also follow us on Facebook, Twitter, Instagram, YouTube. We'd appreciate you subscribing at the YouTube channel in particular. Charting Wealth, that's who we are. All the best from the whole team here. Hope you have a great weekend and a wonderful week practicing trading. God bless. All the best.